Hello traders, this is Dan, and in this weekly trade review I'm going to show you a couple considerations of how to increase the odds of trading bottoming patterns. A couple introductory notes here. Bottoming pattern, it's in a downtrend. There's only three trends: uptrend, downtrend, sideways trend. So what we're trying to do is look for some event that it is shown that it's in a sideways trend and ready to break out to an uptrend. But many of them have very poor odds of holding because it's just a consolidation and a bearish trend until it breaks a downtrend or sideways trend. We're going to see, we like the 20 EMA to flatten out and possibly even the 50, because by definition, since moving averages are lagging, that's going to tell me when they're flattening that, hey, this thing's been stabilizing, it's been consolidating for a while. And so here's the key now. Then we're looking for something. I call it something extra. My partner Greg calls it an event. Give me an event that said now you're ready to go. Sometimes I call it a something bar. It could be a shakeout, a bullish gap, a downside shakeout, wide range bar ignored on plus volume, of course. And then, as with every pattern we trade, you need a price void, which means look to the left. Does it have room to advance before it hits significant resistance? And so I want that on the time frame that you're trading plus one higher. The master trader approach is to combine many concepts that make up our method, and that's what you're going to see me do here on this particular example. ASPN, a little commodity building stock that we gave our subscribers last week. So let's start over here on the left. The blue is the 20, green 50, red 200. So I have a flat long-term trend, but whatever happened on this stock, it just collapsed, getting far from the 20. The 20 is far from the 50. So that's telling me that this thing just got clobbered over the last, couple weeks and months. So we have a potential bottoming pattern. Where? Well, this actually would have been the very first time that would have got my interest. Why? Because it was a bearish gap breakdown that had no tail, and that closed with a big fat engulfing range expansion bar. That's the biggest green bar in this whole decline. This is kind of a bullish 1, 2, 3. It's stabilizing, it's consolidating in the upper part of that. That's bullish price action. Then it had a closing breakout, and it had a price void. Look to the left. With this momentum moved down, it had plenty of room to go back up. So that's the price void concept. So we were going to give this over this bar's high the following day. Luckily, it didn't trigger. It didn't take out the 5-minute high. And so it failed. This was a closing under this pivot. So it went back up to the high. It's still a watch item. But now this is what made it fantastic. This ugly red bar closing breakdown again suggested lower prices. What happened next? I have an inside bar. Okay, still nothing to do. I'm still bearish because that was for inside, pretty close to an inside bar that only retraced 40%. So under the green bar's low, you could have shorted this. Well, it kept going up. That almost negated the full wide range breakdown. Then it went sideways. I got narrow bars. With a red bar's close. Now I have a closing breakout again. So it was the closing breakout, flattening 20. The 50's not flat, but you can see them converging in here, which is a sign of contracting volatility. And the subsequent breakout suggests a beautiful move, target to the 200 or so, because again, there's no resistance. But what made this incredibly bullish is really starting here. It's a multi-month bottoming pattern, but no follow through to this ugly red bar, 100% retracement, bullish price action, closing breakout. So we bought over this bar's high, and we had such a beauty. And this is a closed trade here, so this is in the closed trade spreadsheet for our subscribers. It says how long we've had it open. We always give the technical reason: breakout from bottoming pattern at 2050 after wide range bar downside shakeout. Exactly as I'm describing to you right now. The same day we sold half into strength, and then we went into trail mode. You can see just this 3-day move got short term really exhausted. If you just eyeball it here, you know, it ran from 31 bucks to, you know, 37, 38. So we kept we just trailed 15-minute bars pivots, and we had a nice 16% rate of return in 2 days. Hope that helps. See you in the next trade review video.